Alrighty, so this is MKC Electronics capstone presentation. Our group consists of me, Corianne Rutherford, Keondae Shields, and Madhu Saidi. Your vision soaring through our eyes is like our slogan that we have for our company. And we're going to have a brief financial overview first, and Mr. Saidi will be covering this portion.
So for this section, we have a total revenue. We didn't quite make it to the $1 million mark, but we were over 800,000. We had a consistent revenue growth from year 5 to year 12, and we were steady for a year and had a small decline for year 14. And when it comes to the earning per share, we started off with our earning per share being valued at 75 cents for year 5. And for year 14, our earning per share was valued at $13.08. Our EPS grew at an average of 7% per year. Next slide, please. And when it comes to the return on equity, our return on equity grew from 14% on year 5 to 53.4% in year 14. The increase in our return on equity reflects our profitability of our company and the effectiveness of our competitive strategy. And when it comes to credit rating, we starting at year 7, our credit rating remained an A. We got an A on the credit during year 7, and we never had to take an addition. We never had to take an additional loan to help to fund our company. And in year 14, we successfully paid off the debt that we had. Next slide. Thank you. The end year stock price. The graph show our stock price grew steady in each year. Overall, we had the second highest stock price. We had an average growth of 8% each year, ending our stock price at $334.44. Our image rating, the graph shows that we had an inconsistency in our image rating, with the highest being year 14 at 79. We received a corporate responsibility award for exemplary corporate citizenship in 3 years in a row, from year 11 to year 13. So
first, MKC Electronics strategies and vision. This is our vision. Our here at MKC Electronics, our motto is your vision soaring through our eyes. We emphasize this in our company vision to provide the world with the ability to quickly access and capture any piece of information they need. Our mission is to have the ability to provide the best resources, products, and materials for action cameras and UAV drones.
For our performance targets, so if the simulation were to continue for EPS and stock price, we would want our EPS to be at or above $16 for year 15, and then at or above $18 for year 16. And we would kind of expect our stock price to be around $332 for year 16. Our return on investment, we would want to be at or above a 55 by year 16. Our credit rating would probably still be an A+, because we've paid off all of our loans and we've pretty much had consistent cash flow to where we can keep avoiding any loans. So we don't really anticipate that we would need to take any more out. And we would shoot for our image rating to be at or above 95 by year 16. And then our competitive strategy. Which Mr. Saidi can continue. Modu, you might be mute. You might be on mute.
I'm sorry, I was on mute. Sorry about that. I was saying the competitive strategy for action capture cameras. We had a low-cost provider. We established a low-cost strategy to put us in a greater position over our rivals. Our strategy helped us have a decent performance over the years, although we had our profit margin around 30% mark. We had not experienced enough sale for cameras to make a big profit off our cameras. Next slide, please. And for the competitive strategy for UAV drones, we provided the best cost provider. We provided the best drones in the market with the best price in hopes that we would exceed our customers' expectation. This strategy helped our company build a brand loyalty with our customers. During the last few years, our profit margin was above 30% mark, which helped us meet the shareholders' expectations.
For our production strategy, one of the things we definitely wanted to do in the beginning is invest in robotics upgrades. So we wanted to do this as early as possible. That way we could save on labor costs over time and increase production efficiently. We also offered an attendance bonus. So another part of our strategy was to have a higher attendance bonus for our employees. That way there would be an incentive for our employees to be more productive. And the graph just shows how when year 9 rolled around, our production costs or labor costs decreased because at that point we had invested in the robotics for the cameras and drones. Our finance strategy. So we definitely wanted to get all of the debt paid off by the end of the game or semester. So because we did that not completely later on, we were able to have an A+ credit rating by year 13. We also had started to repurchase our shares of stock. And we also wanted to increase the dividend payment to our shareholders. So to achieve this, we had to make sure that the decisions we were making when it came to building our product and labor costs and marketing, we had to make sure that all of those decisions helped increase our stock price.
MKC Electronics competitors. Our AC camera competitors, we believe that Dynamic Technology and Biodrones are our closest competitor. Dynamic Technology is performing better than our company. Biodrones offer a lower price and overall sales. They are still not performing as good as we are. UAV drone competitors are Dynamic Technology and Biodrones are known as our closest competitors. Both companies provide lower prices, with Dynamic beating our company in sales. They have a market share of 40%, and Dynamic Drones with a market share of 20%. They are not surpassing us in sales. The performance has been steady in the last 2 years. Beating our competitors. We have a low cost provider for our cameras. We're going to have to offer a lower price than our competitors in order to win this competition. For our drones, UAV drones, we went with the best cost provider as well. And we're going to produce the best drones and offer low prices that our competitors can't match.
So just the lessons that we've learned over the past semester. For crafting a winning strategy, our game plan was to be the best cost provider for the market, and to make decisions that would increase our revenue and profit so we could invest it back into our company. From products that we offered to advertisements, workshops, and training, and we also aim to have the best PQ rating compared to the other teams. When exchange rates were doing well, we took advantage of that and we could upgrade our products to increase our PQ rating. And also by doing that, we could charge a little bit more and that would increase our profit margin. Over the course of the semester, we found that drones for us always had a greater profit margin. So we invested more and just focused a little bit more on drones compared to the cameras. As far as being financially and competitively successful, it's really important to put money into research and development. So I want to say at like year 9 or year 10, the exchange rates just plummeted. And because of that, we had to cut funding for research and development. And as the game went on, it was really hard for us to kind of factor that back in and still come out above and have a profit. So we weren't really able to keep investing in research and development. And I think that hurt us more over the long run. But managers should always invest in research and development for their products. And also, if we would have kept investing in research and development and putting more money toward it, upgrades for our cameras and drones would probably have been at a lower cost. As a manager, you also want to watch your competition's moves. So you should definitely not avoid, you shouldn't ignore it or not pay attention. You should always pay attention to what your competitors are doing and the decisions that they're making. You should also, that includes like paying attention to the quality of their products. Maybe they're stronger in one market than another. Maybe their price is better, but their PQ rating isn't as good, yet they're getting more sales. So one other thing to look at is you also want to keep an eye out on how much advertising is being spent versus their competitor. So later on in the game, we spent more on search engine advertising for our drones. And we ended up spending the most out of all of the teams to try to get more sales for that. And that's the end of our presentation. So thank you so much for listening. And if you have any questions, now's the time.
Okay, thank you, everyone.